Diane, do you really mean to tell me that someone can sell a property in the U.S. and not pay any capital gains taxes?
Absolutely. By using Section 1031 of the IRS code, you can defer all of the capital gains taxes on the sale of investment and income-producing property.
And I know you've been doing this, I think you just started, right? More or less, how long ago did you start doing this, Diane?
About 25 years
And
ago.
I know that there are some complex scenarios, right, that our audience can come up with. So if you could explain what really is a 1031 tax exchange?
Well, the 1031 exchange is part of, as I mentioned, part of the tax code that allows a person to sell investment or income-producing property as long as they purchase a new investment or income-producing property under the timing guidelines, and there are a number of basic rules that you have to follow, and you can do this continuously.
So continuously is definitely good.
Yeah.
And with regards to capital gains tax, for those people who don't have investment properties or they don't necessarily know what it is, could you explain what a capital gains tax even is?
Sure. Capital gains taxes are, your capital gains is the difference between what you've paid for the property originally, which is your cost basis. There's a little formula. You have to add on capital improvements that adjusts that basis up. And that adjusted basis between that and what you sell the property for, that is the gain that you will pay taxes
So
on.
it's basically what you paid for the property plus your improvements, that would be your cost basis.
Right. And it's also adjusted again with another area, which is depreciation. So when you own investment property, one of the benefits, tax benefits, is that you get to write off a little bit of depreciation every year, but that also adjusts your basis downward.
Got it. And I know there's multiple types of properties, right? There's primary residences, there's an investment property, there's second homes. What properties would actually qualify for a 1031?
Yeah, so any real estate that you own, when you sell it, you owe taxes if there's any gain. However, there's different code sections that apply to, for instance, your primary residence. You get an exclusion from taxes up to a certain dollar amount. Your second homes, you don't get to defer any of the taxes. You're just lucky you own one, and you get to pay taxes when you sell it. And then if you own a property that is either land, commercial, warehouses, single-family homes, condominiums, any type of real estate that you're holding for long-term appreciation or for income production, that falls under the 1031 tax code. And that's where you get to defer the payment of those capital gains taxes. And as you reinvest each time, as long as you hold on to the property and you treat it in such a way that it's qualifying under the IRS's definition, next time you sell it, you do the same thing. So you can defer taxes until you die, and then you don't have to pay
At that point, it doesn't really matter.
At that point, it doesn't matter. Your family, friends, whoever you are, your heirs can receive, that inheritance, and then they don't owe your taxes either.
Okay, because I get this question often from our clients, right, is what kind of properties can I do it for, right? Can I do it with a primary residence? Is it an investment property? So usually when I get questions, not that one so much because it's typically investment properties, right? That's where the main benefit is. But when I get that one, I say, you know what, you need to call Diane because she has all the answers for you. I'm just the source, right? I've learned to be the resource of information, not the source. As far as to time requirements, are there any type of time requirements in the exchange?
Yes, there are. The IRS is very strict, with their timing deadlines. So your exchange actually begins from the date that you close on the property, on the sale of your property. However, you must have a qualified intermediary involved, otherwise it won't qualify. So the timing starts from the closing date, and then you have 45 days in which you have to identify your replacement property in writing. And there's a couple of different rules for the identification process, but as long as you give your identification to your intermediary, those are the properties that will qualify. And the other timing deadline is a 180-day completion deadline. So you must have everything done, purchased, and closed within the 180-day period.
And you would be the qualified intermediary, right? That's your role in this.
Yes. Our company, myself, we act as the qualified intermediary. So we handle the documentation that you have to have. We provide you with those deadlines and information on how you identify.
And I know that
your
there are
property.
some key dates when it comes to, these deadlines, as you mentioned. One is identifying and the other one is closing, which the closing, you said it has to be in 180 days, right? Less than 180 days.
Right.
And how about the identifying process?
The identifying process is within 45 days of your closing date. So it's a very short time period. And if an exchange is going to fail, that's probably where it's going to happen. One of the best, pieces of advice is that when somebody's doing a 1031 exchange, that from the date of your closing, you have this 45-day deadline. Ideally, you want to get under contract to purchase so that by the time that you identify, you already know what you're purchasing. You put that on the list and maybe one or two backups.
What's the difference with identifying a property and getting under contract? Is it one and the same thing?
They're not. And that gets very confusing for people because even though all the IRS requires of you is to provide a list, and there's two different rules. The first being that you can list up to 3. You provide this written list to your intermediary saying, I'm looking at buying property number 1, property number 2, or property number 3. So you have to provide that written list by the 45th day, but you don't have to be under contract. However, if you're not, and you just provide a list, when you go back out to try to make an offer on these properties, if they're gone, then you're out of luck. You've lost the exchange because you cannot change the list after the 45th day.
Wow. That's a hard date as far as to the 45 days and the properties that you identified. So if you have the 3 that you found,
right,
and neither of the 3 are ready, then what would happen at that point?
If you found 3 properties and you don't have any accepted contracts, your exchange is canceled. So that's why I advise everyone to, put that 45-day deadline on your calendar. But in the meantime, just be making offers. Try to get a property under contract. So when you do send in your identification list, if you haven't closed by then, that at least the first property on that list is the one that you're trying to purchase. And maybe you have room to just go ahead and list 1 or 2 backups in case the deal
right, because 45 days is not a whole lot of time, right? Especially if you're in a competitive market where you're trying to find the right deal, right? So if you wait to close to identify the property, I feel that they may be cutting it a little bit tight. What you may want to start doing is prior to your closing, right? Yes. You aggressively start looking and perhaps maybe even place an offer or 2 with some kind of language that's built in there, right? Where if your closing doesn't happen for whatever reason on the property you're selling, to where you can cancel out of that property you're looking to purchase, because you've got to get a little bit more aggressive when it comes to identifying something, because if those 45 days are up, right, you're potentially up the creek.
Many people will do that. You know that your deal's going well. It looks like, yes, it's going to closing. Maybe a week or 2 before, whenever they find the property, they can go under contract as long as you have a way out in case something happens to your sale. So, and there's other types of exchanges too that can save that. We won't get into it too much now because there is a way to purchase before you sell. However, it's more costly and more complex, but it can save a situation where maybe you have to find a new buyer for the property.
Got it. We can't give away all the secrets today. We'll leave a part 2 for that. Now, as far as to helping our audience with identifying a property, who can help them with identifying a property?
Well, you need your realtor to help you find those properties. That's something you can help with, Chris.
Absolutely. Locally here in South Florida, I'd be glad to help anyone. And anywhere throughout the country, we've got a great network of agents we'd be glad to refer. However, it would be typically be a real estate agent, correct, Diane?
Yes, it would be.
Got it.
So one of the first rules that we talked about is the properties have to qualify. Okay. They're referred to as like-kind properties. Like I mentioned, any real estate that is held for long-term investment or production of income in a trade or business. Secondly, is you have to identify within that 45-day period. And now, in order to defer all of the capital gains taxes, the IRS says you must buy a property of equal or greater value to what you've sold. So basically, what it comes down to is whatever your net proceeds are, you need to spend as down payment. And if you paid off a mortgage, you're going to get a new mortgage to replace that. So there are two separate sets of numbers in an exchange. We talked about your basis and your gain. That's how you figure out the taxes that you owe. And the IRS says if you don't want to pay taxes on that gain, you need to buy property of the same value or more, moving over all of your equity and replacing your debt. So that's how you defer all taxes.
Got it. Now, with regards to a property type, right? Can someone have sold a single family home and then purchase a 10-unit apartment building, or does it have to be a like property?
No. So that term like kind is very confusing for some people. They think that if they sell a single family, you have to buy a single family, or you sell a lot and you have to buy a lot. But that's not what the IRS's definition is. So their definition, is that as long as the property is held for investment or production of income, then it qualifies. So you can sell a single family rental and purchase a warehouse or purchase raw land, or sell raw land, buy a multifamily, buy warehouses. It's interchangeable. It cannot be a primary residence or for personal use like a second home.
That makes total sense. And when exchanging, do they need to reinvest the net proceeds or the sales price? What's that number there? What are they looking at?
The general rule is try to target something that's your, equal or greater to your sales price. However, there are some closing costs that come off that are qualifying, some that are not. So the ballpark figure that you can always look at is take the commissions off because it's a one-time expense. And so let's say you sell for $500,000 and you've got whatever the net is after commissions come off, because we know those are the easy one to take off. That's your target price, okay, or more. There's other closing costs that come in, but it gets into some intricacies about whether they're recurring or they're not recurring, and different costs in an exchange that may not qualify. So in general, they should just keep in mind that it should be something close to what they sold for. And it can be multiple properties. It doesn't have to go into just one.
Definitely helpful. And when and how would someone get started with this 1031 tax exchange process?
We don't have to be involved until a couple of weeks before closing. However, if somebody's thinking of selling and wanting to get a better idea of how the process is going to work, what they're going to need to provide, it's always good just to call your intermediary and start asking some questions so that they're ready ahead of time. They know what they need to do because, like you said, that 45-day window for identifying is very short, and you don't want to start having never investigated it. So call your intermediary, talk to your realtor.
So you're saying a couple weeks before closing. I mean, if somebody who's listening today has a specific scenario, maybe it's simple, complex, would you be willing to chat with them just to, put the scenario together for them and maybe give them some ideas on how they could piece their transaction together?
Absolutely. Absolutely. That's my job. We provide the qualified intermediary services. However, our consultations are free. Anyone is welcome to contact me to go over, what they're selling, who's on the title. Ownership issues come up a lot of times. So we need to go over things like that. And I provide information on, like our brochure, which gives you a good overview of the basic rules for how the 1031 works. Great.
So they reach out to you, they run a scenario by you, provide them with some basic information, right? Maybe a brochure, a flyer, where they can get some more in detailed info. as far as the process goes. So,
Absolutely.
Diane, today has been extremely
Yes.
helpful for myself, and I feel that for our viewers, they're going to really enjoy the information you provided them today. And I'm going to make sure to put your contact information down below where they could reach out to you. So, Diane, any final thoughts on anything that
Okay.
maybe I missed that you feel that would be good to touch on?
Well, I think we've gone over the basic rules, and a little bit about the process. You just have to make sure that you don't wait to the last minute to jump in to try to set up an exchange, a couple days before closing, because that inevitably is when we find out details that we should have found out before. So whenever you're thinking about selling, doing an exchange, just give us a call and we can go over that process.
Fantastic. Well, I thank you for being here. And I would strongly recommend anybody who's listening today that you're looking to put together your power team. Make Diane part of your power team when it comes to 1031 exchanges. And as far as real estate agents go, I consider myself a great resource locally here in South Florida. And any mortgage lender that's part of this process, speak to everyone with anticipation, right? Don't wait to the last minute, because that could be the recipe for a disaster, right? So again, thank you for being here, Diane. And as far as our audience goes, if you enjoyed this podcast, please make sure to like, subscribe, and please comment if there's anything that Diane shared with you today that you found valuable. And again, anything else that you found extremely useful for your business. Thank you for joining us today.